Welcome back. Let's straight away go across to an exclusive conversation that CNBC TV 18 is having with Mr. Sajjan Jindal.
To consolidate our situation, we are a leading steel producer in India, and we would like to now focus more on value addition. And rather than expanding our capacity, we are focusing on adding value to our steel products and sell branded products into the domestic market. And also we are looking at exporting large volume of our steel to our customers all over the world, with whom we have long-term tie-ups and long-term association.
Okay. So as far as acquisitions is concerned, what would be the strategy? Will you perhaps be slightly conservative and not look at the kind of aggressive acquisition that you are looking for from the JSW Energy side?
Yeah. So we were looking for creating a global size steel company, which we have now achieved. We are one of the large global steel producers. So right now we are not very excited about doing acquisitions unless they are very attractive and unless they make a lot of economic sense for us to create consolidation. We may look at acquisition, but otherwise at the moment we are not very excited about acquisitions.
You want to go very aggressive with that. And what is the strategy to be able to maintain the current debt equity levels, to maintain your cash flow and yet expand? What is the strategy you're putting into place?
No, our stated goal is that we are over the next years we are going to reduce our debt and bring our debt equity to a much more attractive levels, and we will only invest in such businesses where we can get returns very quickly. So therefore our idea is to remain conservative, because steel industry is very cyclical and we don't want to get into a situation where there is a debt trap or something like that.
When you say attractive, what is the level that you look at for your debt equity ratio?
Well, where the various companies, there are below 1:1 debt to equity.
Below 1:1. Okay. And last question, sir, as far as your fundraising plan is concerned, you've already sought shareholder approval. Can you outline, I mean, keeping in mind the results are tomorrow, can you give us a sense of what is the kind of fundraising that Steel will look at in the next 1 year?
Well, our total capital expenditure over the next 2 years is 7,000 crore rupees, which is primarily into the value addition areas, as I mentioned. So we will be raising funds to partly finance that expansion, and partly to replace our high-cost debt, which we will replace by these bonds and stuff like that. So yeah, that's our plan for the next couple of years.
750 million is the amount that...
Yeah, I mean, 750 million is in the form of bonds that we want to raise.
And there will be more going ahead?
There could be to replace high-cost debt, as well as because we plan to reduce our debt burden in the company as well.
And how much would that be in that case, and through what modes would it be more importantly?
You are putting me into a spot because I don't know all these technical answers.
Fair enough. Yeah. Thank you so much, Mr. Jindal. Appreciate it.
All right, so that's Mr. Sajjan Jindal. Now let's move on to the other big story that we are tracking today.